Hey everybody, welcome to Everything Money Channel again. It's your boy Paul and Seth. I pointed to myself, Paul, when I said me, but of course it's Seth and your uncle Paul. Paul, how are you doing today on this beautiful day?
I love the snow. I don't care what anybody says. I love the snow.
We're in Ohio. We got 8 feet of snow outside. My kids just left for snow sledding with friends in the neighborhood, which is not social distancing, Paul. But more or less, we'd like to get into what we always talk about, which is the market, stocks, and I have to call you out as everyone else did. You did a video on NIO a few days ago, and you got blasted.
And then we did Tesla yesterday. Got blasted, not as hard as NIO, but got blasted still.
Yeah, so you're absolutely wrong on NIO, Paul. This is an exploding company. It's a projection. We got so many comments.
There'll be an explosion. Don't worry.
You got so many comments of how Paul. One of them was the only way you can get rich is to dump your money into a company like this and hope it goes crazy. That's the only way.
I didn't even see that comment.
Yeah, someone said that, and so they also said, Paul, that you have no idea what you're talking about. You're probably just getting by, and that you'll be working well into your 80s with.
And the funny part about that comment was, I hope to be working well past 80 because I love it, and I'm not financially independent. I took a screenshot of that comment and sent it to all my friends, and I'm like, look what this guy said. It was just incredible.
Paul, we looked at charts like this one of NIO, and this is yesterday. It's gone down. It's gone down a little bit in the last couple of days. But we looked at this parabolic climb, and I've been asking you for a long time, like, what is? I still don't get it. I sort of play the role as our viewer. If you've never seen the show before, Paul is a very experienced veteran in terms of stocks and real estate. He's got at one point had 1,000 units of real estate a couple years ago. Have sold them off, and an owner of 20 businesses.
No, I have 600 units now.
600, yeah. I mean, you sold a big 300 unit a couple years ago. So, but regardless, I'm your average Joe, a guy pretty much living paycheck to paycheck, and I'm a wedding photographer. And so I bring your questions to Paul, and he's been in my life for 3 years now, kind of guiding you.
You live paycheck to paycheck. I think that's a little bit dramatic.
Well, I mean, look, we got blasted this year, Paul. You know that. I mean, my mortgage is deferred.
We got blasted. We got blasted too.
My mortgage is deferred. My car payment is deferred. So it definitely got tough at parts. So yeah. So anyway, I bring the questions that I kind of want to know to Paul. So Paul, we see a parabolic stock rise like NIO, and every other video on the internet is devoted to just telling everyone to buy. We have some of our competitors in the field, people who are stock investors and teachers, educators, telling everyone that NIO is the next best thing. It's the next Tesla, of course, and that you're absolutely wrong in your assessment of NIO. And so it begs the question, Paul, is like, you've been wrong on, quote unquote, wrong on Tesla in that the stock price, how do I say this? It keeps going up. You look like you're wrong. And you look like you're wrong on NIO. So I literally had to ask you yesterday, outside of the podcast, is I don't get it. Like, my job, at least what I think as a normal person, is I need to buy NIO at X dollars and then sell NIO stock above X dollars, and I make great money, and the whole world is right. Same thing goes for Tesla. I don't understand your disciplined approach to investing, where we find companies where fundamentals only matter, and then you tell me to invest in a company that perhaps the stock price hasn't moved in a long time, and I don't get it. So can you explain to me? And the funny part about this, Paul, is we're on a day where another EV specialist, the greatest and best thing ever, Nikola, is coming crashing down. And so it's.
And by the way, what do you remember about Nikola? A few months ago, it was the can't miss.
Show me that.
This is the future. This is the next. This is the next. What's it called? Tesla.
Yeah.
And it hit a high of $80.
So at that point in time, there is no way in the world our Nikola fans would have ever said this is not just going to completely explode, and it has. The wrong direction.
Now, no. We didn't say that. It was different. NIO is different. And all of a sudden, Nikola announces that GM's partnership isn't going to work out anymore. In fact, I put a security deposit on the Nikola Badger truck, and they just emailed me yesterday and said, we're refunding your deposit.
What happened to your finger there? Did you hurt yourself on a freak nose picking incident?
No, I mean, I picked my nose with my thumb. This was a just me biting my my hangnail.
I do that too. All right, and listen. So go back, Paul. I mean, really, you need to explain to me why. Just double down on your thoughts on NIO and tell me why you're begging people to take a more disciplined approach.
Okay. I look at stocks as companies. That's the way you should look at them, unless you're a momentum trader. I'm okay with you being a trader, but if you're telling me a trader being not somebody who backstabs me, a trader, TRADER, someone who's out there saying, I don't care what the company is, what the name is, all I care about is I'm going to play the price of the stock. I do some of that. I'm okay with that. But when you start saying it's the future and the company is the future, then you're starting getting more into fundamentals. It's all fundamentals at that point. They'll say, well, fundamentals don't matter. Well, by saying that they're the future of electric vehicles, EV, you are saying fundamentals matter. Because all you're doing in a stock is saying, I'm paying today for a future stream of cash flows. When you're only buying it based on the price going up, there is one cash flow there, and that's the end cash flow. If they're not paying you a dividend, nothing like that, you're based it on, is the stock going up? So at that point, you got to say, is the company fundamentally going to be worth a lot more than it is today?
Let me hold you right there, Paul, because I think you froze me in my tracks when you said this. So when I'm buying NIO today, the only way I can make money, because the only way I can make money is if someone else in this world buys that stock at a higher price and drives it up. Is that what you're trying to say?
That is what you're hoping for, and that is called the greater fool theory.
Tell me about it.
The greater fool theory is saying, I don't care what fundamentals is going on with the foundation. I'm just hoping the price goes up and some other fool will buy it from me. Is that insulting? Sure. But it's a very well-known thing in the world of investing called the greater fool theory. Your goal is that somebody else foolishly pays you more money because they believe in the momentum and all that stuff. And my comment back to you is, when do you sell then? At what point are you actually going to sell your stock? Because the company has so much growth potential. When it finally achieves it, you're assuming what? You're going to assume it's going to keep going? Well, at some point, it's got to be worth what the actual stabilized company is worth. And I sat there yesterday and did a video, check it out, on Tesla and Berkshire Hathaway. And I compared the two companies and said, Berkshire Hathaway is worth less than Tesla. Yet it makes Berkshire Hathaway in the last 12 months has made more money in profit than Tesla's even had in revenue. So Tesla's brought in $28 billion in revenue. That's before all expenses, everything. In the last 12 months, Berkshire Hathaway's made $35 billion in profit. Coming like NIO, let's look at NIO. If you want to share my screen, NIO financials. They have sales, but they don't have profit. I'm not saying they won't ever have profit, but if you look down here, they've never had a quarter. They have billions of dollars in losses. And not only that, they're increasing their number of shares. So every single month, every single quarter they lose money, they're also issuing more shares to grow. They're hurting you in two different ways. I look at this and say, look at their cash flow. All a company is the present value of all its future cash flows. We're looking at their cash flow here. They don't even have operating revenue. Their cash flow is negative. Their free cash flow is negative, guys. And look at that saying, does that mean it's not a buy? No. Companies that are growing and are young that lose money still have potential. NIO could still make money in the future. The issue is when we're paying any price imaginable so we can get that, that's where I have a problem. I compared Tesla and Berkshire saying, how many cars does Tesla have to sell in order to make that $35 billion or to be equivalent of the Berkshire Hathaway value? And the number of cars they have to sell don't even exist in this country. That's in this world. That's the problem. And I look at it saying, for you out there who say, well, that doesn't matter, well, then great. Then the story shouldn't matter because story is fundamentals. That is all part of the fundamentals of a company is looking at the story. If I could buy Tesla today for $1 billion, I would buy it all day long, wouldn't even blink an eye. I sit there and go, yeah, it's got great potential. I shouldn't say I wouldn't blink an eye. I look at their debt. There's a lot of debt. But the whole point is, at $1 billion all day, at $550, I wouldn't touch it. There's a price in between that makes sense where it's reasonable. The problem is when you're the rah, momentum, all this stuff, you don't care what the price is. You don't care about the fundamentals. I said to somebody the other day, what would you pay for Tesla? Well, I wouldn't pay $2 trillion. Well, why not? Same with NIO. NIO's currently selling for like 80 billion. It's like $65 billion. By the way, it was 80 billion just a few days ago. $65 billion. Pay 600 billion. Well, I wouldn't do that. Why not? Tesla's selling for 550 billion. Why wouldn't it? And I mean, their revenue is actually pretty strong here at NIO. And Seth, it's funny. Everybody always gives their reasons why something's actually going to work out. I just sit there and go back in time. I sent you the article recently talking about the dot-com boom. Major companies, Amazon, eBay, Cisco, Microsoft, these companies that are still around today and thriving, they still lost massive percentage of their value in the dot-com boom. You can still have a company if you told me today Tesla's going to be around for the next 100 years, I would still say, great, there's going to be a major correction in the price at some point. Doesn't mean it goes away. Just because the company's around doesn't mean the stock doesn't go down. Look at AT&T. Talk about AT&T all the time. AT&T, share my screen, would you, Uncle Seth?
Yeah.
Look at AT&T stock. It was double in 1999 than it is today. Double. It's gone down in half in 21 years. Is this company still around? Yeah. Revenue's up, profits up, all in the last 20 years. The multiple 20 years ago was just way too much. So it came down to reality. That's my point, guys. Love the car, love the company, but don't pay too much for it. I always say I'm going to be a billionaire someday. Math is going to take care of itself. Are you giving me the $1 billion status now? No. Why not? I haven't earned it yet. Let me go earn the billion first before you call me a billionaire. That's the whole idea behind these companies. Is it hard to understand? Yeah, I used to think the same way. Like, no, it's technology. It's changed the world. The internet changed the world. Electric cars are helping the world. I don't think it's changing the world. The internet changed the world, and companies still falter. Look at Amazon. This is the example I always give. Amazon is currently at $3,200 a share. Let's go back in time to, let's go to 1998 to 12/31/2003. Look at this price right here. $107 a share, December 10th, 1999. Let's go all the way down here. $6.01 a share. That is a fall of 94%. And it's still around today. And that was over a period of October of 01 to December of 99. That was less than 2 years. It was 22 months between peak to fall. And you're going to tell me you'd have kept Amazon down here? Of course, everybody watching the video said, I would have kept it. I believed in Amazon. No, you believe in Amazon now. You're the Monday morning quarterback who says, oh, I knew that player wasn't going to work out. But yet you don't own a team. And you'll never own a team. If you own a team, you fail miserably. That's the point, guys. This happens all the time. Name me any other. Look at Cisco. Let's look at Cisco. Add Cisco to this. Cisco hit is the orange. $80 a share. Fell all the way to $8 a share. Another 90% drop. Intel. These ones. Intel hit a peak of $75 a share. Bottomed out at $13 a share. Another 80% drop. These are all companies that are around today. AMD. AMD hit a peak of $47 a share. Down to $3 a share. $3 a share. It is currently a $100 billion company. It fell 95% or whatever the number is. These are all these. So it doesn't matter if the company stuck around. It doesn't matter if they still have cash flow. At some point, fundamentals do matter. And they matter very, very aggressively at some point. You know, I'm just showing. By the way, name any tech company from 2000. It fell massively in the next 3 years. Massively.
Well, I too struggle with this, thinking that you're quote unquote wrong. I like listening to your fundamentals, but a lot of people say it's the FOMO, fear of missing out. I just see all the other videos about NIO. I myself, behind your back, bought $8,000 worth of NIO a few weeks ago. It went up, and I sold it. I made a $6,000. Yeah, I sold it yesterday. So, I mean, because you've been talking about the dips, and so as it started going down, I said, to hell with it, I'm sort of taking my winnings and go. But, you know,
you're gonna double in price, you're going to hate me.
So that's okay. But here's the point, Paul, is I was driving the car thinking to myself, I was like, Paul has a ton of money. I mean, millions of dollars that you mess around with, and you account for your family's money. You manage it. So why not someone with a bunch of money? Why wouldn't you be more flashy and risky with it? You as a person like yourself, you have very little.
Go broke.
What's that?
That's how people go broke.
Well, the point is, like, I don't have your kind of money. I'm on a far lesser scale, but I'm acting much more risky. So like, wouldn't that be reverse? Why do people?
Listen, there are billionaires and really wealthy people I know who lose a lot of money in these stocks. It's not reserved just to people without money. I literally get in arguments with people worth $100 million. They say I don't get it. Everybody thinks I don't get it. Some people do, some people don't. Value investing is a way of thinking. You either get it or you don't.
You know, there's not a lot of people like you, which is why I love hearing from you. You know, I think it's very common that everyone knows the slogan is buy low, sell high.
Everybody says that, and everybody wants a good deal except for investments.
Again, I don't see it. With the Nikola a few months ago, with Tesla, with NIO, everyone is buying high. And then the companies that...
Well, their theory is this will be a low price. This will appear to be a low price at some point.
Absolutely, Paul. People were saying, like, when you were questioning people, why won't you pay $500 for NIO right now? They said, no, that's crazy. I'm getting out when it's at $300. And
they won't. Because if it's so easy to get to 300, they'll be like, man, it got 300 so easy. It's not going to go down 50%. Even if it does, I still made a lot of money. I'll just hang on to it. That's always the mentality. Always the way it goes.
I likened this to Bitcoin 2 years ago when it exploded around this time, around Christmas time. And normal people, I mean, people who had never thought about quote unquote investing at all. I had made a mention on that I was a big fan of it, looking back fairly stupidly on Facebook, and people were questioning me. People were emailing me, how do I get? My sister got into this, and so like people who were getting in at $20,000 a coin, it started going down and down and down, and when it got to 3, their mindset was not now I'm going to sell. Their mindset is I'm just going to keep. Because I've already lost. I mean, so we've seen this.
But in order to get to 3,000 a coin, it had to have been sold along the way. So maybe you knew a few people who kept onto it. And I understand. I've heard the same thing. Like, hey, listen, I've had it. I might as well keep it. Great, but the thing is, people had to sell for it to go to 3,000. So there had to be a lot of selling for it to go to 3,000.
So to wrap this up, Paul, what are you advising? What is a more disciplined approach than chasing some of these companies? That basically the fundamentals, as they're saying, the fundamentals that just simply don't matter to people. What are you advising?
I would advise you take your money, you flush it down the toilet, and I'm just kidding. I would advise that you look at history, guys. Look at the .com era. Look at any .com or tech stock between 1998 and 2003 that's still around today, that are flourishing today. And you'll still see they all fell 70, 80%. I'm not saying that NIO and Tesla, all these companies won't be around in 20 years. I'm just saying that even if they're around in 20 years, there's going to be a lot of down and hurt along the way. If you don't care, fine. More power to you. But there will be a lot of hurt. History has shown this many, many times that whenever there's a new technology, and by the way, technology, over 500 years, it's always technology that leads the way. It's just what the technology is. 200 years ago, it was trains. 100 years ago, 120 years ago, it was cars. 100 years ago or 80 years ago, it was planes. Then it was computers. Then it was internet. Even you see what I'm saying? It's always some technology. It's just a matter of what that technology. I remember somebody recently telling me like, oh, cars are the same thing. I'm like, are you kidding? If you were in 1900 and all of a sudden there was a thing that said, hey, you could drive this thing around and get to a location, that's the ultimate peak of technology. Mm-hmm. Television. Guys, our parents had televisions with 3 channels on them. My parents didn't even have TV. 3 channels on them. We have 300 channels now. That was the peak of technology back then. So I don't want to hear you say like, well, it's different technology. It's all the same. The characters are different. The plot's the same. That's it. And in 50 years from now, the technology will be different. We'll be looking at it going, guys, the internet, come on. That wasn't really a big deal. Yes, the internet was a big deal. That literally changed the world. Everything we do today is focused on the internet. It literally changed the world. And those companies still fell. And the internet companies, the .coms, vast majority went to zero. That went public. So I don't want to hear it. You're going to tell me that, like one of our mutual friends said, oh, maybe Tesla goes down 10, 20%. No. Maybe Tesla goes down 70, 80, 90%. That is not unreasonable. What are they at today?
See, Paul, I think it's unreasonable, but you're saying it's obviously not.
No, it's not unreasonable. It's frozen on there. There you go. I mean, look, $553 billion, guys. This is nuts. This is nuts.
In the end, guys, if you came to this channel unlike all the other channels, if you came here for us to tell you to keep buying NIO, Tesla, and Paul, you know, there's new companies, these like new Chinese companies, Li Auto and XPeng. Now people are buying into this. It sounds a lot like the Bitcoin craze where people were getting into all the other coins. You know, coins were emerging and getting people's money as well. I know a lot of people that lost a lot of cash in it. But regardless, if you guys like what you see, make sure you're smashing that like button in the bottom corner there. As always, subscribe. We have a Patreon, guys. We launched our Patreon 2 weeks ago. It's been incredible. You can join us to have more exclusive access to, obviously, myself, the smart, handsome guy of the group, and then Paul, just my sidekick. But you will have access to our Discord channel. You hear about Paul's actual portfolio, what he's trading, what he's doing, and you'll have access to him. So go to patreon.com.
And if you want to pay for the highest level, that's where you get complete access to me. I talk in that chat every hour about my investing thoughts. Trader Mo and I talk about our investing ideas. We talk about everything in there, positions. We are very active in that channel. I give the most to the people who give us the most. It's awesome. It's great. Worst case scenario, you join Patreon at the lowest level. You get our app for free as long as you're a Patreon user at all levels. It's awesome.
Follow along the channel, the Everything Money channel. We've done literally hundreds of videos over the past 2 years, and we'll be doing more. Thanks for joining me, Paul. Thanks, guys. Thanks for watching, guys. Love you.